Okay, welcome to this video. This week I didn't have much time to post, so I tried to make up for it by showing and explaining the trades I have done last week. I think this will also help you to understand how you can play the market causality on shorter time frames. Most of these trades were scalps or intraday trades. And as I've said many times before, this is basically my approach, my style to take advantage of the market causality and the actions of the smart money algos who manipulate the market. And there are many different ways of playing the game, so to speak. But hereby I again show you how I trade these days. So let's get started. This was of the fourth short dollar yen. So the price moves towards the upper range of the market. We have a nice medium-term stop accumulation around the center of the price range. And we have old as well as new dumb money long traders trying to buy a reversal up in dollar yen. So therefore I entered a short at market because also those short-term stops have been taken from the shorties in order to trade back into the range towards this main target. It's not a high confidence trade, but it's like a medium confidence trade, like a tradable setup which comes around 2 to 4 times per day if you trade like 8 markets. Sometimes more, sometimes less. And yeah, in terms of timing, there was a good entry. Again, it went up a bit and then straight down towards the target. And then as expected, went for the middle of the range. Then the next day, euro dollar had those new dumb money short traders, and these guys placed their short-term stops at the high of the day. So therefore I decided to buy euro dollar intraday and to place my target at this plateau against the shorties. And that worked nicely. So price came up as expected against the shorties, going for the short-term stops, the black lines. And then a few moments later, in fact, we have more shorties entering the market, trying to short the price down to the low. So I actually decided to do another trade and a bigger one, again long against those shorties up to their short-term stops. That worked out nicely because the smart money algos pushed the price up as expected, cleaning out all the stops at this plateau at the high, overshooting and giving me a nice slippage on the take profit as well. So that was a nice trade. The same day, another dollar yen setup came, and it's pretty much a similar story as before. So this time we have new dumb money longies entering the market, these green bars, trying to buy dollar yen up. And we have again a stop accumulation here in the middle of the range. So after the price went up above the high, so basically when a post counter run situation, the smart money algos have already taken out the close stops of dumb money shorties. Yes, so I've cleaned this and this high. So then I knew that the market would now go towards the main target against this new longies accelerated by these, so I shorted again. Price came nicely, and then even the dumb money pulled in more empty stops to the range. So at the end, the market took all of these targets and exactly at the last empty turned back into the range. That was a nice trade. Okay, so on the 7th, this one I posted. So this is a more complicated scenario. We have, this is a news trade. So we had the big US unemployment data being published. And, beginners should completely skip such setups, and even experienced traders, as I wrote, they should only use low leverage because they have some news risk in there. But let me elaborate a bit again. First of all, regarding the fundamentals, I was quite confident that US data would be good or better as a result of Trump's economic policies. There tends to be also a time lag in economic data. And we saw before the results of the tax cuts and other pro-economic policies of the Trump administration. So in this scenario, we have like the dumb money going long, so fresh long is going into the market and old long is still being in the market. You can see the old ones here, the green lines here on the y-axis. These are all positions of dumb money long traders trying to buy reversal up in euro dollar. So that's what I want to see in order to do such a news trade. I want to see a match between, okay, my opinion on the fundamentals are against what the dumb money thinks. The dumb money tried to buy euro dollar thinking the dollar would lose value because the data would be worse. And I thought the opposite. So the data will be better or good, and the dollar needs to be strong, and therefore euro dollar needs to go down. And then we see that aligned. So the dumb money is long, old and new longies are in the market, and their stops are at the low here. So in the worst case, the smart money would have taken those short-term stops of the shorties like 10 pips higher and then go down. So basically, remember plausibility principle. The smart money has everything it needs, the plausibility on their side and the dumb money on the other side. So boom, they went for a nice move down, hit my take profit nicely, and in fact they went down further. Okay, this trade I'm quite proud of. So the same day the following happens, then we get an unannounced news item that suddenly the EU as well as the UK drop their key demands regarding Brexit. So Brexit would be a bit easier than expected, but it was just a comment. And what happened is cable shot up like I think around 100 pips, and there were however not many shorties in the market, you know, so it was like an empty grip move up. So I knew that because it's just a comment and there can be all kinds of comments, the market would actually retrace for back into the range. And look at that, I looked at pound yen, it got pulled up by the cable move. It still has small longies in the market, but no big shorties and the big stop accumulation of the dumb money longies. So I knew that the price needs to do at least a 50% reversal. So I shorted, and look, the price also took out this plateau here and the short-term stops. So the shorty stops are cleaned and the big stops of the longies are here. So I went short for a 50% reversal move down. And again, no big shorties entered the market, which would have decreased the trade quality. And here, look, this is how it looked on a 4-hour chart. Rather longies in the market, empty grip move up, normal stop around the middle of the range, big stock accumulation of the longies, so price needs to go back down. And that's exactly what happened. So price came down nicely. Now here I had to leave the my trade station, so I actually took profits prematurely. I didn't write it all the way down. However, I placed another trade after, which I'm very happy about. So the white line here was my short limit, and this might take profit. So basically said, look, either the price goes down and I don't get filled again on the short, fair enough. But if it goes up again above the high and takes out this short-term stop here, the turquoise line, well, then I want to again get filled short and right down towards the main target. This is exactly what happened. So the price went up. Look, I got filled on a pip and came off immediately. And we had another bridge stop here, and then the main target came all the way down to the main empty run. So this is amazing, isn't it? It shows you how you can play the causality. And it's kind of repetitive. The logic is always similar. This is basically, more precise trading based on the knowledge I've shown so far. Remember that I've only shown around 15% of the overall knowledge, but even that is already enough to do those kind of trades if you follow the rules as I have explained. So it may seem a bit discretionary at first, but then after some time you realize that not really. I would say it's a mix of an understanding how the smart money algos manipulate the market and move the price against the dumb money groups according to the principles such as time and range, such as plausibility, such as the money tolerance, as well as a bit of trader common sense, I would say. Yeah. So for example, you can see, I mean, those trades here, I made rather cheap entries in each of those scenarios. You see, I sometimes used limits to get a good price, or I waited for a nice pullback up. I didn't just enter the market in the direction I knew the price would eventually move towards. So that precision is very helpful if you want to trade more precisely, more in the short term. I've shown a lot of trades by now. I've shown position trades which go over days, some over weeks. So I've also shown other things, but these are precise intraday trades, often related to moves back into the range. Sometimes not. Sometimes also we trade outside of the range towards a high, towards a low, etc. Yeah, but I think this is a nice overview, especially now to show you how I tend to play the market causality and how I try to trade rather precisely. You can see like sometimes the price hits my target by a pip and then turns the other way, etc. Now I also am not perfect. Sometimes I do mistakes or moves which are not optimal. So, you know, for example, also that the limit was filled in the pound yen again. It could have been that it didn't get filled, of course. But let me show you. I think it was somewhere here. Yeah, for example, it happens that I miss a moment to increase a position, or it happens that I exit a bit too early, you know, or I do it on purpose. So here on the first trade, the price came as expected, but I decided not to write it all the way down, but to actually take the profit at the short-term stops. The reason being that some shorties came into the market, you know. So normally, if the dumb money tries to go in the right direction, I do not insist on the move towards the target. So I take it a bit earlier. These are advanced things one can learn as well. But you can see even those scenarios tend to repeat themselves. At the end of the day, it's a two-dimensional game, but there are also meta levels which I didn't explain so far. I have explained a bit the medians. Maybe I do another video on this, and I put only the median on the chart so you can actually see what the tendency is moving towards the money medians, and then turning there. Or the middle line being a magnet, etc. And the smart man likes to overshoot these if dumb money comes in, etc. But these are more advanced topics. I will not elaborate now. Okay, I hope you enjoyed this overview and you learned something also for your own trading. Stay safe.